Hey everyone, today we will present our financial ratio trend analysis, focusing on Heineken Malaysia Berhad and the Carlsberg Brewery Malaysia Berhad. Valuation is part of the AKW104W accounting and finance course. This presentation name is Liu Yi. Now let me do the introduction. This aims to analyze and compare the financial performance of Heineken Malaysia Berhad and Carlsberg Brewery Malaysia Berhad using financial ratio analysis. The main objective is to evaluate how the financial position and performance of these two companies have changed over time. In financial ratios across several years, we are able to identify trends, strengths, and potential weaknesses in each company. These are leading players in the Malaysian beer industry. Heineken Malaysia Berhad is one of the market leaders supported by a strong brand. Heineken Tiger and Guinness, it has a strong market presence and operates in a mature and highly regulated industry. Carlsberg Brewery Malaysia Berhad, on the other hand, is a well-established brewing company known for its stable operations and conservative financial. Carlsberg dominate the local beer market in Malaysia. Both companies are leading players in the Malaysian beer industry. Heineken is one of the market leaders, supported by a strong brand portfolio. Well-known brands such as Heineken Tea, Guinness has a strong market presence and operates in amateur and highly regulated Malaysia. Carlsberg Brewery, Malaysia Berhad, on the other hand, is a well-established brewing company known for its stable operations and conservative management. The market environment in Malaysia presents unique challenges for the beer industry. Malaysia has a relatively high Muslim population. In addition, alcohol products are subject to high excise duties and tariffs, ranging approximately from 20 to 60%. Methodology, financial data were obtained from the consolidated financial statements of both Heineken Malaysia, Berhad, and Carlsberg. Proceed with a detailed financial ratio analysis and a discussion of the results.
Hello everyone. My name is He Ruijie. My matrix number is 165336. And my student ID is USM 2022125999. I will link the key takeaways using the three different slides. So let's see the first, the sales and profit performance. It shows that two different companies make profit in different ways within the same industry. Heineken is more focused on converting scale into the profit, meaning sales growth turns into the strong bottom line result. This usually points to the better pricing, product mix, or the cost control. The Carlsberg is more steady, with the profit improving in a more gradual way, which often reflects the tighter cost discipline and the stronger focus on stable operations rather than pushing profit aggressively in the short term. So let's see the next. The working capital and the financing pressure. It highlights as growth ties up the cash. The inventories and the receivables are basically cash locked in the stock and unpaid bills. The Heineken shows the higher working capital pressures, adjusting the more active channel approach or losing credit term to support the expansion. That can drive faster growth, but it also makes cash tighter and increases sensitivity to the financing costs. The Carlsberg keeps working capital more controlled, which may limit its speed, but reduce the cash drain also. So let's see the third, the capital structure and then the financial risk. It connects the story to risk. Faster expansion usually needs a big balance sheet and a stronger funding support. Heineken looks closer to the growth priority profile, so it must managing the interest burden and the cash flow more carefully under the high interest rate environment. Carlsberg look closer to the stability priority profile, with lower risk exposure and smoother financial pressure, but typically a more casual growth pace. Overall, Heineken leans towards more fast growth with stronger profit conversion, while the Carlsberg leans towards stability with lower financial pressure. This is a trade-off between the risk and return, not simply one company being better than the other. So that's all my consent. So welcome the next one.
Hello, Professor. My name is Li Wenwei. My matrix number is 165355, and my student ID is USM2022126118. I will be responsible for the liquidity analysis, inventory turnover analysis, and the receivables and assess efficiency comparison between Heineken and Carlsberg. Okay. So for the first part, I will explain the liquidity analysis for Heineken and Carlsberg from 2020 to 2024. Liquidity ratios measures the company's ability to meet short-term obligations. From the chart, Heineken consistently shows higher current ratio and quick ratio compared to Carlsberg. And most ratios are close to or below 1. This is common in the brewery industry because inventories from a large portion of current excess. The liquidity gap shows the impact of inventories on liquidity. Heineken has a larger gap, indicating higher reliance on inventories. Overall, Heineken demonstrates relatively stronger liquidity stability. Okay, next I will discuss inventory turnover, which reflects how efficiently inventory is managed. Carlsberg records higher inventory turnover across most years. This indicates faster inventory movement and better stock management. Heineken shows lower turnover during the pandemic period, but improves significantly after 2022. The peak in 2023 reflects recovery in demand, while the slight decline in 2024 suggests inventory adjustments. On average, Carlsberg demonstrates stronger inventory efficiency than Heineken. Lastly, I will explain accounts receivable and asset turnover. Carlsberg shows very high receivable turnover in the early years, followed by a sharp decline in 2022. This reflects changes in distribution and credit conditions during the pandemic. Heineken shows a more stable receivable turnover trend across the period. For asset turnover, Carlsberg consistently records higher values. This indicates more efficient use of assets to generate sales. In conclusion, Carlsberg demonstrates stronger operational efficiency, while Heineken maintains more stable liquidity performance. Okay, that's all of my part. Thank you for your listening.
Okay, for my part, I will be analyzing the leverage and profitability performance of Heineken Malaysia and Carlsberg Malaysia over the period from 2020 to 2024. Okay, let's begin with financing risk. From the debt ratio, Carlsberg consistently records a higher level of debt compared to Heineken. On average, Carlsberg's debt ratio is around 0.75, while Heineken is around 0.63. This means that Carlsberg relies more on debt financing, so its financial risk is relatively higher. However, when we look at times interest length, both companies maintain very high coverage levels. This indicates that their operating profit is more than sized to cover interest expenses. So even though Carlsberg uses more debt, the default risk remains low. So to answer the first question, which company is less risky? Heineken is a financial server because it uses low leverage and has a more conservative capital structure. Next, let's look at profitability. Heineken records slightly higher net profit margin, especially in 2023 and 2024. This means Heineken retains more profit from its ranking of sales. This reflects better operating cost control and pricing structuring. On the other hand, Carlsberg has high ROA and avenging. This means Carlsberg is more effective in using its assets to generate profit. Heineken performs better in macro profitability, while Carlsberg performs better in ester effectiveness. When we compare ROE, Carlsberg is significantly higher than Heineken in every year. This leads to the key question: is high ROE caused by efficiency or by leverage? The answer is both. Carlsberg is efficient, but its higher leverage also magnifies ROE. So the high ROE is partly driven by leverage, not only by operation efficiency. EPS for both firms is stronger and relatively stable. Heineken records slightly higher EPS in 2024, showing consistent earnings contribution to shareholders. During this period, Malaysia experienced inflator and raising excise duty on alcohol. This factor increased the production and tax costs, which normally reduce profit margin. However, both companies managed to protect margin through price adjustments, premium product mix, and cost optimization. This explains why Macau improved after 2021, when the market recovered from the pandemic. So, to summarize, Heineken has low financial risk due to low leverage. Carlsberg shows high ROE, partly because leverage amplifies returns. Inflation and exit duty increase the cost, but both firms successfully maintained profit margins. Overall, Heineken is financial preserver, while Carlsberg delivers higher shareholder returns. Thank you. Okay, for my part, I will be analyzing the leverage and profitability performance of Heineken Malaysia and Carlsberg Malaysia over the period from 2020 to 2024. Okay, let's begin with financing risk. From the debt ratio, Carlsberg consistently records a higher level of debt compared to Heineken. On average, Carlsberg's debt ratio is around 0.75, while Heineken is around 0.63. This means that Carlsberg relies more on debt financing, so its financial risk is relatively higher. However, when we look at times interest length, both companies maintain very high coverage levels. This indicates that their operating profit is more than sufficient to cover interest expenses.
Hello everyone, my name is Dewey Chen. My matrix number is 165315. My student ID is USM2022126880. Today I will talk about three parts. The first is the historical PE ratio and EPS comparison. The second is financial analysis and recommend. The third is the future outlook. Okay, the first I will talk about the comparison of company conditions. From the two charts we can learn about that from 2020 to 2024, Heineken Malaysia brand showed a stronger earning performance than Carlsberg Malaysia brand. Heineken's EPS recovered from 0.51 in 2020 to 0.55 in 2024 with a higher 5-year average of 1.10. Carlsberg's EPS increased more slowly from 0.53 to 1.10 with a lower average of 0.88. Heineken also displayed more stable valuation trend, as PE ratios declined generally while Carlsberg's PE ratios were more volatile. The second is the financial analysis and recommend. Based on the comprehensive data, it can be concluded that Heineken achieved a stronger post-pandemic recovery in sales and profits, reflecting better profit conversion and financial resilience. As through Carlsberg's mentioned higher inventory turnover, a slower earnings growth indicates a more crucial operation approach. Overall, Heineken delivered more stable and stronger shareholder return. Third, as an outlook, Malaysia's interest rates are expected to remain relatively stable, supporting predictable borrowing costs and long-term investment planning for binary companies. However, inflationary pressures in materials, energies, and logisticals may continue to compress margins, requiring cost control and selecting price strategies. Alcohol demand is generally stable, especially for well-known and pioneer brands, and does not change much even when price increases slightly. However, the industry still faces challenges from taxes. Alcohol demand is generally stable, especially for well-known and premier brands, and does not change much even when price increases slightly. However, the industry still faces challenges from taxes, regulations, and compliance costs. Under these conditions, financially strong companies such as Heineken are better able to handle higher costs and adjust to regulatory changes.
So the limitation of the study, the time lag of financial data analysis is primarily based on historical data. Uh, 2020 to 2024 it may not fully reflect the real-time financial impact of strategy shift occurring in late 2025 or early 2026. So the next is quantitative vs qualitative gap. This study focuses heavily on the financial radio. It does not fully account for qualitative factors such as brand loyalty, internal management change, or the effectiveness of special marketing campaigns. So, market sensitivity, financial radio are sensitive to certain external shocks like global supply chain disruption or something occurrence reputation which cannot be predicted by historical analysis alone. So the last one is accounting policy difference. While both company follows MFRS standards, minor difference in how they categorize operating expenses or promotional costs may slightly affect the comparability of certain efficiency ratios. So the last one, the external factor affecting the industry. So regulatory, the six tax update budget 2026 excise duty hike under Malaysia budget 2027, 10% increase in excise duty on alcohol beverages take effect from November 2025. This raised the beer tax from 175 to 192.5 ringgit per liter. Margin in part both Heineken and Carlsberg face significant margin pressure and must decide whether to fully pass the cost to consumer, which will in part sell volumes. The next economic tourist is possible income. With Malaysia year 2026 is a major as the government tried to attract 47 million tourists in 2026 is expected to drive significant volume growth in the F&B and hospitality sector. Major sporting event, the IFA World Cup 28 historically a high consumption period for the beer industry, like boosting PH 2026 revenues.